Good morning, traders, and this is your Aussie day trade setup for today. So we ended up with another red bar. Let's just double check where the nonsense data is. Okay, so the nonsense data is not that bad. So we have ended up with another red bar. Okay, and did we close this gap? Sorry, I wasn't even watching this the Aussie yesterday. So we've closed the first gap. There's still two gaps below. Oscillator is grouping very nicely in an area that you want to be in for the long term. You can see the last time it happened here. Okay, and then pretty much for the whole month it rallied. If we come back to here, you'll see a decent grouping down here, and you can see how it rallied. This area as well, fairly decent grouping, some decent price action with this engulfing bar, and then we rallied. Okay, so looking at what we have now, we've had some breakaway gaps to the downside. We are through the 200 EMA, but this grouping here is fairly significant. Okay, so and this is a fairly decent pullback based on this move here. So we are pretty much hovering on the 61.8. The 72.6 is also fairly close, which is pretty much the next gap close. So if we drill down, sorry, there's one other thing I wanted to show you there. We have a little bit of divergence here between these two bars. So you can see there's a low and a slightly higher low, low, lower low. Okay, if we just take a slightly higher time frame, you'll see there it is there, low and slightly higher. Okay, I'd like to see this break above the negative 80 or close above the negative 80. That would be a trigger on any of the higher time frames for a move to the upside. Okay, so looking at the 3 hour, you don't really see the diversions on the 3 hour. It could be a double bottom from there to there, there to there. Okay, so there's just too much here indicating be careful. Don't chase the shorts. Okay, trend is down, obviously, so we do want to be looking for shorts. But as I said yesterday, you're looking for the shorts higher up. You're not looking to be short in this area here. Okay, moving on to the hour. No structure here for any move to the upside. Basically, if you were holding short at the moment, your stop area would be above this fractal at the moment, because there's just too much going on here, which it may looks like it may just pop up. Okay, but looks can be deceiving as well. I don't really see any structure here. I think that's the bottom line. I'll just get across to the 12 minute. Nope. The only structure I can actually see right now is going to be I'm not really interested in this tail here, but that's kind of the structure or the range that I see forming at the moment. And let's see what we're in for here. 300 points, that's a fairly decent setup. And then the closing range is there. Okay, so let's ignore this for now. So this fractal, these two fractals here they coincide with our closing range. So for me, that's probably the valid signal. A break to the downside, I'm not chasing that short. Okay, a break to the upside, I would consider chasing the long, purely because of what I see here from a price action perspective. Okay, big move down, and now we gradually moving to the upside just yet, although we have formed a higher high here. So I'd like to see us get through the moving averages. So that's pretty much what I see at the moment on the 12 minute. We've broken through once, pulled back, and we're now hovering on the moving averages. So break above 51.110 would trigger longs for me. Break below 49.911 I'm not so sure that they would trigger shorts for me. I'd prefer to be short much higher up, so that would just allow me to sit and watch price action again. If we just get across to the Ichimoku, let's see if we have any structure here. So the 12-minute there is nothing but bearish structure. Bearish cloud, bearish twist. That's a bullish signal there, but that's not enough. I need more than one. Okay, half hour, flat Kijun, flat Tekinson, flat cloud, massive resistance upside. This does not bode well for a long. Also, it doesn't bode well for shorts at the moment. It's indicating that we are ranging, which is pretty much what we're doing if you look at what we're doing. So ideally, you'd want to be short somewhere off the cloud here. Same on the hour. So the size of the cloud, the deviation here from Kijun Tekinson is a warning not to be short. You want to be short off Kijun here or off the cloud, sort of off this gap close here would be a valid entry for me. And 4-hour trend is down, everything is down at the moment. You should be looking for shorts, but not down here. Okay, this pin bar is a bit of a warning sign. Okay, and remember the deviations that we're getting as well is also a bit of a warning sign. So don't want to be short down here. You want to be short higher up. And the daily we have closed below the cloud, but the cloud is still green. Okay, so we've got bearish, bearish on the daily, bullish. Mixed signals at the moment. So with all that in mind, I'm pretty much sitting on hands again. I'm not really interested in putting my money into this market just yet. I'll wait for some decent structure to form before trying to chase something here. I think of all three instruments that I look at every morning for you guys, the Dax looks like the best setup at the moment. That does look like it's offering some buying opportunities there. The Dow is looking a little bit confused, and we've got Facebook results today, so I think that's going to tread water a bit until then. And the Aussie is all over the place right now, so I'm not really keen on that. Okay, anyway guys, I know this one doesn't help you this morning, but that's my view. Money staying in my pocket means it doesn't disappear, which is a great strategy as well. Anyway, hope it helps. I'll catch you later. Cheers for now.